Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at Forex trading on the NASDAQ, Kiwi dollar, pound dollar, Aussie dollar, dollar CAD, and dollar Mexican peso. Last time we looked at all the gaps in US indices and US dollar pairs. Then something incredible happened. Before we look at that, don't forget to like, subscribe, and get notified on YouTube, Facebook, and Instagram. After we posted the last video, Donald Trump announced that he would impose 20% tariffs on goods from Canada and Mexico. If we look at US dollar MXN, we see the effect that had on the Mexican peso. Price action filled the aforementioned weekend gap, flew higher, then fell back to 20.4 pesos. We may have a long opportunity as price action has fallen to this lower trend line and the stochastic oscillator is now oversold. We see similar craziness with US dollar CAD, with the gap being filled, Canadian dollar going much weaker very quickly, and price action falling back down. Not every gap was filled, but the main ones that did were the Aussie dollar, pound dollar, and Kiwi dollar. Euro dollar and dollar yen gaps were filled, but just by the highs and lows of the candle wicks. The same thing happened to the S&P 500 and the NASDAQ, but not the other two. One of the main reasons for Canadian dollar weakness was the falling price of crude oil. We see price action on WTI in a descending triangle with support in the $66 zone. Today is a holiday in the United States, so the markets will be calm, but we have a statement from the Bank of England and GDP from Canada, so watch for volatility and opportunities. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.